Alright, guys. Welcome back to another one. It's been a week, I guess? Yeah, it's kind of crazy. Anyways, we're just gonna get right into it. I'm not gonna talk your heads off because I'm a chatterbox and I really need to learn how to stay on task. So, this is a new video talking about my trading strategy. And this is not much different from the other video I did talking about my trading strategy, but I've been really working hard on having a more clarity in the market. Um, and I think I finally got it down pat. And there's a lot of bonus information here, like lots of nitty gritty stuff that does help with your trading. So ultimately, what is GXT and TTFM, otherwise known as Garrett's model and T Trade's model? So all you need really, right? And this is like super simplified, super simplified. But you need universal sequences, and what is universal sequences? That is going to be your external range. Oops, sorry. External range liquidity to external range liquidity. That's going to be internal range liquidity to external range liquidity, and that's going to be external range liquidity to internal range liquidity. Once again, if you want to know a little bit more about what these are, go check out Garrett's channel. So after you have your universal sequence, what do you need from the universal sequence? You're going to need a swing point, right? And then you want to confirm, like on the lower time frame. To be honest, not even on the lower time frame, on every time frame. I think this is what sets profitable traders, like really profitable traders, apart from non-profitable traders. You want to align yourself with the phases of price. And you're probably wondering, what is phases of price? Well, the market has three phases of price, right? That's going to be expansion, consolidation, retracement, and reversal. That's going to be expansion, consolidation, retracement, and reversal. I'm going to erase this because I don't need this. I already know what they are. But just for your sake, that's what the phases of price are. T-Trades has a nice video on this. And then your entry. And your entry is going to be, there's multiple different ways to enter. ICT has a slew of entry models, but the one that I trade is a continuation. So most traders you'll see trade either inverse fair value gap, or the CISD. So the CISD is the initial reversal, and maybe that might come with the inverse fair value gap, but I'm going to get rid of inverse fair value because I'm not going to say I don't trade them, but I don't use them. Like, they're not the primary entry for my model, right? And so the CISD is the initial reversal, and then I trade a continuation, which is just a continuation OB, basically. Very rare will I trade the initial reversal. I'm usually trading a continuation OB, which can be a propulsion block, it can be a SMT OB, it can be a stop run OB, and it can be a fair value gap OB, right? So you want an OB that has tapped into a key level of some sort, because it's going to mean that the OB is just stronger overall, right? With that being said, what is the process of my strategy? Also, I made a really cool time frame analysis thing. So one of my biggest struggles that I was having was how to align time frames. Like, I already know, like, the hourly goes to the 5, the 4 hour goes to the 15, but it was just like very confusing on how to it was just very confusing. Very, like, I think this is like the biggest thing that has held me back, is just understanding how I'm supposed to use the time frame alignments. And I think I'm finally getting to a place where I'm like, okay, I think I know how to do this now. But anyways, so what is my trading strategy, right? So it's going to be weekly time frame. Every week you want to start on the weekly time frame. The reason why you want to start in the weekly time frame is because the weekly time frame can give you a direction for a month. Like, it can establish the direction that we'll be trading in for like a month or a couple months. Maybe not a couple months, but maybe like a month. So like 4 weeks at a time, maybe 3 weeks at a time. And it also allows you to know from a higher time frame standpoint whether we're in a choppy conditions, whether we're in trending conditions. But I would say every week, every Monday or every Sunday, whatever, you want to look at the weekly and just see what is it doing. You want to identify the phase of price because the best listen, so we are the most profitable when we are in trending markets. Unless you trade order flow, then you could like be profitable in consolidation markets too, I guess. But with this strategy, we mostly trade expansions, right? So on understanding what phase of price you are in and what phase of price is transitioning into an expansion is very useful. What phase of price do we go from into expansion? We go from a retracement into expansion, we go from a reversal into expansion, and we don't go from a consolidation into expansion. We have a consolidation and then we manipulate, so it's expansion meets expansion into maybe a retracement into expansion. You know what I mean? So understanding that, okay, we just reversed, then this could potentially push us into an expansionary phase. So understanding what the weekly is doing and what phase of price we're doing, because if we're in a reversal on the week, if we just reverse on the weekly, then we can expect the next week to continue to expand, which is very, very powerful information, because going into the following week, we can expect, okay, we're going to be bullish or we're going to be bearish. Now, we're going to be doing the same thing. You're basically just repeating what you're doing on the weekly and doing on the daily. But the only thing you're doing as you're going down in the time frames is making sure, like, if the weekly is expanding, the daily is expanding. If the 4 hours expanding, if the daily is expanding, the 4 hours expanding. You know what I mean? They're all going in the same directions. And don't get me wrong, I do think the better that you get, you are eventually going to be able to take counter trend trades based primarily on the intraday profile, which is the 7-hour alignment. It just depends, because sometimes you could take a counter trend trade, but the phases of price just make sense. You know what I mean? And something on time frame that I've begun to use, you don't have to use this, but I found it actually pretty decent. It's actually saved me a couple losses. And it just helps you give you really nice clarity. So I've utilized a 7-hour time frame, and it's come in clutch a couple times when determining the direction that we'll be trading in for the day. And it's just really awesome. Again, you always want to confirm phases of price. Every single time frame you go to, you always want to confirm phases of price. This is going to, like, I don't think you understand how goated this is. This will reduce so many of your losses, if you just make sure that you're going from a reversal into expansion, or a consolidation into expansion meets expansion, into retracement into expansion, right? Like, it's this, I'm telling you, like, this is the most powerful thing. So after we have our 4-hour or 7-hour swing point, we want to go down to an aligned time frame, which is going to be the 1 hour, the 30 minute, or the 15. I would recommend starting from the higher time frame, the 1 hour and the 30 minute, and then confirming the CISD, because that's our initial reversal. Remember when I said I take continuations? So to take a continuation, we need to first identify the initial reversal, which is that first change in state of delivery. This will help with swing points. This will help you identify what the next swing point is that you will be taking. So once we identify the CISD and we confirm that this CISD is a V-shaped reversal, so V-shaped reversal is expansion meets expansion, it's quick in and out, right? Hence V-shape. If it's choppy, then avoid it, because that's a consolidation. That's not that's not a manipulation. That's not expansion meets expansion. That is not a reversal. And as I said, we want to trade expansion meets expansion, so we could potentially trade a reversal, not a reversal, a retracement into expansion, because we trade expansionary moves, right? So if we go down and this CISD is like choppy, that's a bad sign, and that means that we're probably going to be manipulated again. So you do not want to enter on a choppy fake reversal, because you will be liquidated. With that being said, assuming that it is a nice in and out V-shaped expansion meets expansion move, we can then start to identify our swing point. And this is where things got a little bit tricky for me personally, because I thought, okay, I identify a 1 hour swing point and then I go down to the 5 minute, or I identify a 30 minute swing point and then I go down to the 3 minute. And yes, you can do that, and this is very discretionary, But you can take a trade on the intermediate time frame as long as the R&R makes sense. And sometimes it's just better because you're going to avoid so many premature stop outs, because the lower time frame can be extremely noisy. The higher time frames most of the time are going to be a lot more cleaner, a lot more straightforward, and it's just going to be a lot more less stress. So that's something that I've begun to do. So you can trade an entry on the intermediate time frame if you are heavily. Oh, and this is just I haven't tested this out a lot yet, but one thing that a rule that I've made for myself to determine whether I'm going to take an intermediate entry or a lower time frame entry is basically determined by if we're heavily discounted. Like if we get a intermediate OB and we're in discount and we have enough room to target if we have enough room to target at least 1.5R or 2R, then I'll just execute on the intermediate time frame. Because would you rather go down to a smaller time frame and get stopped out at a loss because price was choppy on the lower time frames, or would you rather just take it on an intermediate time frame, have your stop at a nice protected level, still be able to get to 1.5R or 2R, and it's just a lot less stress free? I think that makes just a lot more sense, especially if you're a trader that's growing and trying to build your way up, right? So yeah, if we are heavily discounted and the R&R makes sense, then I will take an intermediate entry. Now if we are like more than 50% of the way there, or if we're entering into a premium level, then I'll probably take a smaller time frame entry, just to be able to maximize that R&R. Otherwise, if I took it on the intermediate time frame, I probably wouldn't even get 1R. So yeah, that's kind of that discretionary aspect of whether to take it on intermediate or lower time frame, and that's just a rule that I've come up with myself. I'm still testing this out, but so far it has worked. I realize that if we are heavily discounted or if we're in discount and I take an intermediate time frame, it does work out and I don't get stopped. Well, from the few trades that I've taken, and yeah, I actually haven't come across a situation yet where I've taken a swing point that's nearly near the actually no, that's a lie. I actually have. That's a lie. I have. Yeah. So the closer you get to the target, you're more than likely going to have to take a smaller time frame swing point, like a 15-minute, and then go to the M1, or a 30-minute and then go to the M3 to be able to get on side with that to maximize your R&R. Hopefully that made a lot of sense. Then this is the if then kind of statement. So if you aren't taking a trade on the intermediate time frame, then drop down to a lower time frame. So you still do need that intermediate swing point, but again, if you don't have enough space to the drawn liquidity, then you could drop down to the 5 or M3 or M1. And you're probably like, okay, well, we have this intermediate time frame swing point. Why don't I just drop down to the lower time frame and then get like max 6R? Well, the thing is, you could do that, but you're more likely to get stopped out because price can get extremely choppy and it could do deep retracements, and it could do deep retracements to that protected low on the intermediate time frame. So if you're trying to take a continuation on the lower time frame, you can more than likely get stopped out. I'm not saying that's always the case, but it's better to just be conservative than greedy. Like 2R and 1.5R are already good enough. Do not be greedy. There are times when you can target more, and that's just something I'm still working on figuring it out, but right now I'm just working on consistency, working on win rate, and just being able to perform consistently in the market day by day. But I will say, like, I pretty much have this, like, all of this down pat. Like, all of this, like, weekly analysis, daily analysis, 4-hour alignment, 7-hour alignment, and then confirming the CSD. It's kind of more so the entry aspect that I'm still having a little bit trouble with. Because I feel like the reason why I'm trying to refine this right now is because yes, I have had wins doing it in a little bit of a different way, but it's always been like quite confusing and never quite clicked 100% for me. And I feel like the more I'm gonna just work on getting data, but the more I do it, I think this is gonna make a lot more sense to me. And this method of doing it very much aligns with my mentor. And don't worry, I'm gonna go over an example for you after I talk about all this. Now, yes, I made a little time frame alignment chart. Let's zoom in on this. Like it's like really cool. So we have 6 hour. I still don't really know how to use the 6 hour, but it's probably not as necessary for me anymore because I use the 7 hour now. Because the reason I use the 7 hour is because I can trade Asia, London, and New York. I'm primarily focusing on New York right now just to make sure that I understand 100% what I'm doing and I'm comfortable. And the 7 o'clock candle that I trade is literally the 8 o'clock candle. So like the 7 o'clock candle starts at 8 a.m., which is when I start to trade. So it just works out that the time frame that when I usually come to the charts aligns with the start of a new 7 o'clock candle. So it really does help give me direction. And yeah, reversal alignments and continuation alignments. So yeah. But looking at it now, this is probably not as relevant to be honest. Because it's like I'm going from the 4 hour and then I'm looking for like a 1 hour swing point or a 30 minutes swing point. And it's like, it's kind of arbitrary. But if you did want to go down lower from a 1 hour, then again, you could use a 5 minute. So I guess 1 hour is with 5. 30 minute is with, well, it says 5 here, but it's also 3. You can be a 3 or 5. And then 50 minute is with 1 minute. So it's a nice little chart to have. Yeah, but I don't, other than like the main reversals, then, anyways, with that being said, this is all the bonus information. So this is all like the extra stuff that people don't really talk about that they're using in the back of their mind to make decisions. Like this is the strategy at the basic level, but these are the things that people are using to make decisions based on what they're seeing, and there's so many of them. And I feel like it's kind of hard to find this information. It's not hard, but like I feel like a lot of people aren't aware of it. So I'm gonna run it down because this is crazy. Like this is gold, guys. So driver logic. So Garrett talks about driver logic, and it's very, very useful. I don't really use it I do use it, but I also don't use it. The reason I do or don't use it is because the way I trade and using phases of price ends up aligning with the drivers anyways. But like it depends on what time you start. Like if you're starting at like 9:30, then being aware of driver logic and how to utilize it is very useful. Oh, so I think I actually forgot something here. If the reversal and or retracement has happened prior to the driver, then the driver should just expand. There we go. And this is kind of like a star. I'm actually going to put this back. Yeah, so driver logic is if the high or low of day. So there's 3 different driver logics, right? There's 3 different ones. These are all separate. These are not together. These are 3 separate scenarios. If the high or low of the day hasn't been established, the driver will put in the high or low of day. So for example, if we come onto the day and we're kind of chopping around and we have no clear direction, then the driver could manipulate, put in that V-shaped reversal, put in that swing point that we can trade away from. So even if we come into the day and we don't have a swing point established, then the driver, the 9:30. Actually, you probably wonder what is a driver. So a driver is when liquidity comes into the market. So it could be a news event, or it could be 9:30 equities open, and it's usually a known news event or occurrence. So drivers are things that we know about. So like that's 8:30 news, that's 9:30 equities open, that's 10 o'clock news, that's 2 o'clock news. Anything that pushes volatility into the market, that would be a driver. So this is one of that. Now, same thing. If we don't have a high or low of day established, then 8:30 can manipulate if we have 8:30 news, so that could put in the swing point, and then 9:30 should just expand, right? Same thing here. So if 9:30, if we don't have a swing point, then 9:30 can manipulate, And then the 10 o'clock, sometimes we have 10 o'clock news, so 10 o'clock or the 10 o'clock candle should just expand, right? And sometimes we can even position ourselves prior to a driver. Um, so for example, if we're in a trade, sometimes you'll realize at 9:30 that the market just starts expanding really fast in one direction. You can be in the market when this happens. A lot of people avoid drivers, but drivers can be very lucrative if you know how to use them. Are they riskier? Yes. So if you're not sure, you can lower your risk, but they are really great for getting in and out of the market extremely fast in a couple minutes if you know how to utilize them correctly. I don't really pay attention to drivers as much anymore because I start at 8 and I'm usually, if there is a higher low of day already established, I'm usually positioned prior to 9:30 and sometimes even 8:30 news. So I don't really pay attention to it as much. But do I know about it? Am I aware of it? Yes. So, how do you position yourself prior to a driver? You position yourself prior to a driver if the reversal and or retracement has happened prior to the driver, and which in that case, then the driver should just expand. So, what do you mean retrace, reversal, and retrace? So, if we have a swing point, otherwise known as a V-shaped reversal, and we retraced and we have a continuation already, like if we have the structure there, then the driver should just expand, assuming that we have a draw on liquidity slash a target, right? So that's what driver logic is all about. So telling you, man, I don't know if anybody most people don't know about a lot of this stuff, and this is like the stuff that no one talks about. Like they'll give you all of this, they'll give you all of this, but they might not tell you about everything here. But I mean, some people could argue like you don't need all of it, and you probably don't. But so two-stage CIC or two-stage Kraken correlation, which is otherwise known as a true reversal. These are very powerful. I actually recently added these in, and they work. Like when I tell you they work, they work. Like holy shit! Like anytime I see a two-stage CIC, I just like ugh. I just like ugh. Like it's like waking up and seeing presents on Christmas Day. So that's typically there's two types of two-stage diversions. Two-stage Kraken correlation. So that's going to be an SMT plus a PSP. And that's going to be, or two-stage SMT. So you'll have two SMT. So you'll have like one here, and then one here. That's a two-stage Kraken correlation or two-stage SMT, which is a two-stage CIC. And that is a true reversal, meaning that price has a very high chance of going in that direction. But once again, this two-stage Kraken correlation should never be used by itself and should always be used with proper framework and analysis and use of swing points. All right. And I already talked about this heavily, but V-shaped reversals. And I cannot stress V-shaped reversals so much because I used to take trades that I thought were V-shaped reversals, but they were not. When they say V-shaped, it is a V-shaped, guys. Look at this. If it will load. Look. Okay. Like this is V-shaped, right? V-shaped. There is one thing I don't like about this trade though. It takes a lot of candles to get up here, and it's kind of like din din din. You see how this one just has one big candle, like boom, boom, and this one has so many. Yeah, it is still a V-shaped reversal, but I'm not a fan of that. It took so many candles just to get back up here. Whereas you see this one right before this sell-off. Look at this, boom, boom, in and out, boom, boom, really fast, right? When they say V-shaped, they mean V-shaped, guys. V-shaped, quick in and out, shows a strong reaction and shows strong intent to go in that direction, right? So yeah, next thing is failure swing logic. We cannot trade away from failure swings. We cannot trade away from failure swings. Okay, I know this is going to be contradictory. You can trade away from failure swings, but under very specific circumstances. But I love this rule because it really just puts into perspective. Like when I see failure swings on a lot of stacks, I just get like, oh, that Christmas analogy again. Like seeing presents on Christmas Day. It's not an analogy, it's a simile, but seeing presents on Christmas Day, this is that. I love seeing stacked failure swings because the market has a very high likely chance that we are going to go towards those failure swings. So I love to see failure swings. Love to see failure swings. Love to see two-stage cracks and correlations. Love to see reshape reversals. And yeah, SMT break logic. This is one that I'm going to say ignore for now because even I'm not 100% sure how this works. I have seen it like once. So yeah, but I'm aware of it. Don't mind this one. So decoupled markets. This is a big one because this happens a lot. So decoupled markets is when, like, for example, the NASDAQ is going up and then the Dow is going down, and you're probably like, what the hell? These assets are usually in sync. Why is one going up and why is one going down? I don't know if I'm supposed to trade up or trade down, right? I've been in so many situations where I'm just like, I don't know which direction to go. So calm down. There's no need to fear. So when this happens, when the market is decoupled, it usually means that one asset is lying to you. One asset is lying to you. And what we need to wait for is a swing point to realign the market. So, okay. So the reason why the market is decoupled, right, is because one asset is manipulating. One asset is going lower to sweep out a low to then reverse from. And the way that we determine which asset is the one that's lying is to wait for a swing point on all assets to resync the market. So for example, if the Dow is going down and NASDAQ is going up, right? The Dow is going to hit a level and then create a swing point and then start moving up along with NASDAQ, right? So now I know, okay, the Dow was the one that was lying and NASDAQ was correct. But now that I know that, and I see that they're all moving in sync now, I can now trade higher, assuming that it makes sense. Yeah. So this doesn't happen every day, but when it does happen, it's good. It's good to be aware of how to handle and navigate that. So the next one is premium and discount. Premium and discount is going to be your discount level and your premium level. We love to buy in discount and sell in premium. Discount meaning it's really cheap, premium meaning it's more expensive, right? So I don't know, like just look up a video on ICT premium and discount. It's pretty self-explanatory, to be honest. It's pretty simple. It's one of the more simpler topics here. And this one just targets, like, what can you target, right? You're going to target sequence high or low, external range liquidity, internal range liquidity. You could target 1800 open if the high or low of day is not set with anything. So this is a target. You can target previous day high and low, previous week high and low, and you can also target NWOG's new week opening gap. So yeah. And this is just like you always want to choose the asset with the best framework, and you're probably like, what's the best framework? Like for example, if one asset is reversing from a fair value gap, whereas one asset is reversing from absolutely nothing, you probably want to take the asset that's reversing from the fair value gap because we have sufficient structure supporting price higher or lower depending on whether it's a bullish or bearish fair value gap. So just being aware of that. So deep retracements do not support expansion. So if we're in an expansionary phase and we start to see deep retracements, that is usually a bad sign. You may potentially want to close your position because expansion does not support deep retracements. And this is actually the same thing as up here. I guess I have it twice. But I will read it. Trading the intermediate or lower time frame is a discretionary decision. Intermediate time frame if we have enough space to target 1.5 to 2R or higher, and lower time frame if we don't have much space to the draw on liquidity, right? So if we're going to trade away from a failure swing, then I was just talking about this, right? So if we're going to trade away from a failure swing, then we may need to wait for the next 4-hour candle because we need gaps to form to trade away from failure swings. Yeah. So that was a lot. That was a mouthful. And we are just about to hit 30 minutes. So yeah, guys, that was a lot of information. Holy shit. Holy shit, that was a lot of information. But yeah, man. So far, I've taken a couple of trades. doing it this way, and so far, this is actually the session that I'm doing trading this way, and so far I have a 100% win rate. Oh yeah, I said I'll show you like the example. Okay, let's do a top down because this is the one. I still need to like log this for my trade journal. But oh gosh, I've talked so much, my mouth is like cramped. All right, let's go. To be honest, I think this one was actually a this trade was a more discretionary trade. Reason being is because it's not actually. Okay, hold on a second. Okay, we always want to start. If it's a new week, we want to start on the weekly. But if you're coming to the chart on a random, I don't know, Tuesday after not trading for like, I don't know, freaking 3 months, always start on the weekly because you want to understand where we're delivering from, what's price likely to do, and where we're going, right? The weekly will tell you where we're going long term. So, first things first, I noticed, let's see, that we have this SMT here. So the weekly, hold on a second, put in this reversal right here, right? So that tells me like, okay, we expanded, and then look at this. That's crazy. Look at this. We expanded. We probably took out this high here, and then we put in another reversal signified by this SMT here. And then we put in a swing point, and then we traded, NQ was our weaker asset, into this low, right? Into a fair value gap, supported up higher, like that. And look at this, like that. So, and then we reversed from here, expansion away, validates this as a protected low, right? And then where could we look to target after that? Well, we're going to target back up here, right? And this same high would be like what right here is we were going to target here, right? So this would be our external range liquidity target. So we go up here, we target it, and then you want to see when we target external range liquidity or internal range liquidity, we want price can introduce a new phase of price. So when we get to levels like this, like these external highs or these internal levels, we want to see what phase of price does price introduce. Are we going to reverse from here? Are we going to consolidate here? Are we going to manipulate and continue like reverse, like expansion means expansion and then continue higher? So in this case, it looks like we had a bit of consolidation. We ended up taking, we ended up consolidating at this high, and then we ended up taking out the high, which is kind of, okay, yeah, so we did, and I was like, we kind of went for it, but no, we actually put in a reversal here, right, signified by this, and then we put in a reversal, and then we expanded into this high here. And then we ended up manipulating this again. What did we end up manipulating? I think we ended up manipulating, I can't even tell. I think we might have manipulated this candle, yeah. So we ended up manipulating this candle, which is a 2-stage crack and correlation, like so. So that means we are manipulating this high, which is a continuation signature. Which means that the next day's candle would be an expansionary candle, or the next week's candle would be an expansionary candle. And then, what can we expect? What's our next drawn liquidity? Well, these external highs, that's for sure. This does, and basically, right? And then we have to see how price reacts at this level, especially since NQ and ES are kind of overextended. Oh wait, did I say NQ? YM and ES are kind of overextended, but we still do have a target on NQ. But right now we don't have a reversal to signify that we are going to continue higher from a weekly perspective anyways, right? Now, what can we look at now? So if I was coming into this particular week that we're here on now, let's say it was a new week and it was Monday, what would I look to expect? Well, I see that we closed extremely bullish, which is showing really great intent. and this candle is not necessarily reversing from this high. So I'm going to assume that potentially we could see another week of expansion to perhaps this high. So assuming that this candle isn't here, I would be assuming that we're going to continue higher coming into this next week, right? You saw me just do all of that. Like that, like I'm telling you, like it's crazy. Like phases of price, guys, phases of price. Like, anyways, so then we're gonna go to the daily. And actually, let me go back real quick. Because if we're going to continue to expand, right, we also want to respect the 50% level of this new week's candle here. Like, when I tell you, like, I'm actually pretty good at high time frame analysis, I'm really good. It's just, like, the lower time frames that gives me problems. But hopefully, that will not be a problem anymore because I've been seeing a lot of success. Actually, I also want to be careful not to mark this up too much because I still have to log the trade I took over here. I'm making a catalog, of successful trades, so I have them to look back on, so I can be like, okay, this is what an A plus trade looks like. This is what an A plus trade looked like. So when I come across situations that don't look like A plus trades, then I know, like, okay, maybe I shouldn't be involved in this, or I need to be a little bit more cautious, or maybe I need to de-risk. But anyways, with that being said, if we're going to continue higher, we should not invalidate the 50% of this week's candle. If we are going to continue to remain bullish, as you can see here, we never violated the 50% of this candle, and we traded higher. Look at this one. We never violated the 50%. This one never violated the 50%. This one never violated the 50%. It might tap it, but, like, it doesn't really, you know what I mean? Like this didn't even tap this. It might be hard to see, but it didn't even tap it. So bullish candles are not going to violate, like, the 50% of the candle, right? Bearish candles are not going to violate the 50% unless it's, like, a really deep retracement, which, you know, or unless it's a consolidation candle, like here. This is a consolidation because it's an inside bar. Somewhat consolidative. Like, these are, like, rarely moving. Anyways, with that being said, once we mark out that 50%, now we go down to the daily. Alright, so let's say it's a Monday now. Let's say Monday is here. No. That's not our Monday. Oh, wow. Oh, we just started a new week. Okay, cool. Which is crazy because I think I took a trade on this day. Yeah, I did. And it was a win. Okay, so there's a couple things I do not like about this Monday. And the reason I don't like this Monday is that it looks a little bit like a consolidation, which in that case you don't want to trade. But I did recognize that we did have a swing point here, which is an SMT. I think it's also a two-stage crack. So what did I say? Two-stage CIC, two-stage crack and correlation are, like, really high probability, and I just love to see them. So I was feeling really good about this. I was like, okay, cool, two-stage crack, probably gonna go down or up, which is funny because I actually ended up trading higher. So, yeah, things are weird, guys, but anyways. But yeah, so we want to respect. So far, so good in Monday. We are respecting this. And then as you can see, we do have a divergence here. But the thing is that this is not relevant. The reason being is because we have a lot of failure swings here. We have a lot of failure swings. So I'm not really seeing, this is a relevant reversal point. It's not. What was the other rule I said? We do not, where is it? We do not trade away from failure swings. We do not trade away from failure swings. And these are failure swings. We do not trade away from that. So, coming into this day, I was definitely more bearish because reason being is because one, failure swings, and then two, were, you know, this swing point here. So then after that, we just keep going down. I go to the 4 hour or the 7 hours to get more clarity. So I went to the sorry about that. So, oh my gosh, I go to the 4 hour. And I'm like, okay, so what do we want to confirm when we have a suspected reversal? We want to confirm a CISD. What do we have here? A CISD. A CISD. And we didn't get a good close on this one. But, yeah. And then, if we're reversing, we want gaps to open up to support price lower. I feel like I'm just spewing so much knowledge. Holy shit, it's a lot. It's a lot. We want gaps to open up and support price lower because, again, failure swings. We have all these failure swings down here. So I was expecting price to come back in here and then put in a reversal, but that's actually not what ended up happening. oddly enough, and I ended up taking longs, funnily enough. And the reason being is because this was a swing point. Like 2 o'clock put in a swing point, but I thought it was gonna be a quick in and out reversal. So one thing I like to look at as well is a 7 o'clock candle. And the 7 o'clock candle like this, mind you, there's only like I think there's only 4 7 o'clock candles in a day. So the fact that the second candle is bullish right before the New York session is very like, oh, okay, maybe we're going higher, but like we have failure swings. But we could totally, but it makes sense. We could take a long back into here as long as we ultimately reverse from here to go take out the failure swings. So I was like, okay, interesting. So the 7 o'clock has a swing point, the 4 o'clock has a swing point. So I was like, okay, well, if we are going to go higher, then I want to see a change in state of delivery. So the next thing I did was I went down to the 1 hour, and I think ultimately then the 30 minute. And I was like, okay, we do have a change in state of delivery. So cool. So the next thing I wanted to do, right, what do we do? So we want to confirm, if we go back up here, we want to confirm the 4 hour or 7 hour CISD on the 1 hour, the 30 or the 15, and I did that. I confirmed it on the 30 minute. So then you want to look for a swing point, on one of those time frames, which is either the 15, the 30, or the 1 hour. I was able to get a swing point that's also set with an SMT, which is very high probability, from a relevant level, which is this fair value gap. So this is a fair value gap fill, and we ended up closing over this OB, validating as a valid OB, and we had open draws. To be honest, I took this up to 2R, which was these kind of equal highs, but I probably could have taken it up to here for 3R because this is the EQ of the fair value gap, but I don't want to overstay my welcome, so I was completely fine with 2R, because right now I'm really just trying to validate, improve my win rate and improve the accuracy of the model, and how I trade. So I took that as an entry, and honestly, this was crazy because this was at 9 o'clock. The next 30-minute candle just automatically expanded. So, yo, so many things are coming into play here. So what did I talk about? Driver logic. If the reversal and or retracement has happened prior to the driver, then the driver should just expand. So what do we have here? The reversal and the retracement prior to 9:30 equities open. And then if we go down lower, 9:25, 9:30, bam! 9:25, bam! Immediate. I'm done. Like, literally. In 5 minutes, I'm already out of the market. I'm done for the day, right? So, and I actually wasn't even aware that it was, like, close to 9:30. Because I wasn't looking at that. You know what I mean? I mean, if I was trading live, then I would probably be aware of that. But it was just like, bro, come on. Beautiful, beautiful, beautiful execution. And you can see how I literally followed my whole strategy from top down, exactly how I explained it. And then I show you how all this other extra stuff can come into play. We had driver logic. We had 2-stage CIC, bro. We had V-shaped reversal. We had failure swing logic is not applied right now, but I know we're gonna go for those failure swings. And then you could have definitely used premium discount with this. I'll show you in a second. I'm just trying to see if anything else. Oh, also another thing with drivers, right? This is actually really important. So once the driver starts, it should continue to expand until it hits the draw on liquidity. If it doesn't, more than likely it's gonna come back on you, and you definitely want to break even when the drive, not immediately, but like you definitely do want to break even, as price moves towards the draw on liquidity, because realistically, price should not come back to your entry or hit your stop loss. That would mean that it's a failed driver, because again, expansion does not support deep retracements, right? So how do I put this? How should I write this? Drivers should continue to expand until it hits the drawn liquidity. If it has a deep retracement, it may be a failed driver, and you should probably be E. I mean, you should be E as it gets further away from your entry anyways. You should be E as it gets further away from your entry, because it shouldn't come back until it hits the drawn liquidity. This will save you from a lot of losses. That's another good one for drivers. And yeah, you can see how I use the universal sequence, or maybe you didn't. Maybe, oh wait a minute, I do. Okay, I have the EQ here. So, okay, yeah, you actually didn't see me. So, to be honest, there is a universal sequence here. This is external into internal, and I don't know why I didn't see this, but there's actually SMT here, which is funny. There's an SMT here. And I think we can see it better on maybe like the 1 hour. Yeah. Or, the 4 hour? Why did I not notice that on the 4 hour? Yeah, there's SMT here. It's not a 2-stage though. It's a 1-stage, but there's an SMT here. Which is funny because this one, oh crap, this one's actually, oh my god. NQ is actually stronger. I could have, oh wow. Actually, it's actually good that I got out here, because if NQ hits this could have came back on me dead ass. NQ was the stronger asset. Whoa, hold on. Let me see that. Oh, never mind. No. The reason I took ES was because of the strength switch. See, ES just closed stronger. We actually had a closer over this OB, and the SMT is showing a strength switch, whereas we never even closed over that, so it's a weak closure, and we had a deeper retracement, making ES the better choice. Yeah, that's why I ended up taking ES and not NQ. But yeah, you can see just how everything. So this is external to internal sequence. Sorry if I didn't really talk about that as much. But yeah, I know this is a lot. It's a lot, guys. I've just been studying so much. Like, I've just learned so much, and these all come in. Like, some of these will come up some days, and some of them won't come up other days. It's just a matter of like understanding how to navigate price as things come up. And I'm still trying to improve. But yeah, this is honestly the strategy, guys. Like, literally the strategy. And how I view it right now. So this is like the straightforward strategy. And this is kind of like the rules I'm trying to abide by every single day I come to the market now. And then, this is just extra stuff that comes up. Driver logic, 2-stage CIC, V-shape reversal, failure swing logic, SMT break, decoupled markets, discounted premium, what I can target, choose assets with best framework, best sequence structure, strength switch. This was a strength switch, so that's another one we used. Retracements don't support expansion, trading the intermediate, and yada yada yada. Yeah, but that's it, guys. That's it. Oh my god, that was such a long one. Holy shit. I keep just giving you guys sauce. I just explained to you the whole strat. And hopefully this will maybe make maybe not make a lot more sense, but maybe it'll clear up any confusion maybe from my other videos, or maybe add some clarity to what you already understand. These are just my current findings. So going to do more back testing, and hopefully I'll have, right now I have 100% win rate, so it does make me a little nervous because it's like, oh, when's my first loss coming? But yeah, man, like, I feel like things are finally coming together, so it's just a matter of getting the proof now. Data, it's always about the data. With that being said, don't forget to like and subscribe, and I'll see you in the next one. Peace!